Hello, I am Nathan Eaton, the Assistant Director of Financial Aid here at Methodist College. Welcome to the new student orientation. This presentation is primarily focused more toward parents and guests, so it can be a spouse, people like that. Just give some more supplemental information go along with the primary orientation that we offer the students. You, of course, are always welcome to share this presentation with the students, and you're, of course, welcome to view the regular student orientation presentation as well. There's some overlapping information, but a lot of it kind of diverges as well. In the financial aid office, along with myself, we also have Angie Robinson, the Director of Financial Aid, and also our VA contact here on campus. Jana Ozuna, our financial aid advisor, and then also Alicia Wolf does assist the financial aid office as well, but you might have seen her as part of the admission process, as she primarily works there but does help us as well. Now, student aid, we always kind of go a general overview of these things, how it's determined, why students can't get more, things like that. So the primary factors by the federal government that regulate these things is if a student is dependent by definition of the FAFSA, and then also what year in college is the student. So dependent students receive less federal student loan eligibility than an independent student. And then as students progress through their program, so freshmen, once they hit a sophomore level, they gain some additional loan eligibility, and once they hit a junior level, they gain additional loan eligibility, and then senior and juniors have the same amount of loan eligibility as they're progressing through school. And then once a student hits a graduate level and they're in a master's degree program, they're automatically considered an independent student no matter other factors by the FAFSA definition. And graduate students qualify for even more loan eligibility for their programs. So one of the big questions we often get for financial aid is why a student's not considered independent while they're still considered a dependent student, things like that. So the base reasons for a student to be independent, first is by age. So for the current school year, for the 2020-21 year, if the student was born before January 1st of 1997, then they're automatically considered an independent student. It would only have to include their personal information on the FAFSA. Now, if they're also married, married students are considered independent just no matter what age they are, and then they'd be required to include their spouse information on the FAFSA as well as part of the process. If a student has children that they provide the majority support for, that can make them an independent student as well, but they must be providing the majority of support for that child or that dependent, and generally we would need to be claiming them on taxes, things like that. Also, if a student's a veteran, they are considered an independent student from that, and there's some other circumstances with being a ward of the court, being under legal guardianship, some of those types of things that could also make a student independent even if they don't fit the criteria I mentioned before. Now, something to keep in mind, because we often get this question, even if a student, say if they're born in 2000, and so they're considered a dependent student by age, even if that student lives on their own, works full-time, pays all their own bills, that alone for financial aid purposes does not make them independent. So the Department of Education would still require that student to include their parent information as part of the process to apply for financial aid. Now, there are special circumstances. So there's times when a student or a family member may need to appeal the dependency status of a student. These are rare circumstances and usually have to be kind of more extreme situations. We only grant a few of these each year at our college, and generally has to be a more extreme situation, like an abuse situation where the student's left the household because there's parental abuse, and it'd be detrimental to the student to have to contact the parent to get that information. Situations like that are usually the most common reasons why a dependency override would be approved. As I mentioned before, just because a student lives on their own, that alone would not justify a dependency override, things like that. But if you do have any questions about that, do not hesitate to reach out to our office to see what your situation is and see if you'd qualify for that process if you are dependent but think you should be independent. Now, with loan information, we always want to help and have students use the free money first, so grant scholarships, things like that, and those will always automatically be applied and processed toward a student's balance and account first. And then the student will have to make a decision as far as federal student loans. Federal student loans are offered as part of the FAFSA process, so when a student completes a FAFSA and they're awarded financial aid, federal student loans are part of that aid package that's offered. But the student will then have to make that decision of whether or not they're going to accept or decline those student loans. Without accepting, we will never process a federal student loan without the student first accepting those loans on their account. And we always offer the maximum loan eligibility each semester. So if a student decides they don't need that much, they just need to reach out to us so we can adjust their account as needed. Now, there's a breakdown as far as how much students can receive in federal student loans each semester. So as we mentioned before, dependent and independent students have different eligibility, and also as they progress through college and reach different grade levels, their eligibility increases. So as a freshman, it's $2,750 per semester. As a dependent student, independent, it's $4,750 per semester. That goes up $500 per semester once you get to sophomore level. For a dependent student, it goes up another $500 once they hit that junior, senior level. But as an independent student, when they go from a sophomore to a junior level, that per semester loan eligibility actually goes up $1,000. So that's just something to keep in mind as they're progressing through school, and how that loan eligibility is going to help pay for that balance if they are interested, or if you, the student, are interested in taking out those student loans. Now, graduate students do qualify for $10,250 per semester, and that's just their flat eligibility, no matter how early or late they are in their program. And one other side note we like to make on this is, especially for our second degree students, students who already have their bachelor's degree, they only qualify for federal student loans, and it's rare for the federal student loans alone to be enough to cover the full balance. So just keep that in mind. If your student, like I said, your child or your spouse already have a bachelor's degree, they're going to need other ways of paying, be it payment plans, scholarships, private student loans, things like that, more often than not, to help cover any remaining balance, since those federal loans by themselves will not be enough. And also, any previous loans they borrowed for their first bachelor's also still apply toward their lifetime limit, so there could be limit issues as far as their lifetime eligibility as well. Now, most students have an award that splits the total of their loans each semester into subsidized loans and unsubsidized loans. A subsidized loan is where the federal government essentially pays or waives the interest while the student is still in school, while the unsubsidized loan will start building interest as soon as that loan is processed in that semester, and then throughout the time the student's in school, and then repayment on that loan. The current interest rates for the student loans, it's 2.75% fixed for the undergraduate students, 4.3% fixed for graduate students, and then 5.3% fixed on plus loans. When I say fixed, that means the life of that loan, that'll always be the interest rate, because each school year, starting July 1st of each year, the Department of Education comes out with the interest rate for loans for that year, starting on July 1st until the following June 30th, and any loans created during that year will be locked into that interest rate. Now, the next year, the interest rate might go up or down for that next school year, but the loans you got previously, that interest will stay as it is. It will not go up and down based on what happens in future years. Just the new loans you took out in that new year will have that new interest rate. Now, something I mentioned earlier is very important in the process, but we do require all students to accept their loans in their CAM system each semester. So the student is looking at taking out federal student loans. That is something that will be done every single term. We will not assume, even if they've taken out loans in the past, that they want them again. They will always need to accept them. We just want students to be aware of how much they're borrowing, and we want them to make that conscious decision every term. Also, as part of the process, whether you're a new student or you're transferring, definitely new students, though, you'll need to do entrance loan counseling and an online master promissory note. We have in our student session, there's a little more details on it, but also we'll be emailing out more detailed steps to students once they get registered in classes. But essentially, even if a student accepts their federal student loan, if they haven't done the interest loan counseling, they haven't done the master promissory note, then we still cannot process that loan for the student. So it's just very important those items are completed as well as part of the loan process. Now, if your student's dependent and you're the parent, you do have the option to apply for what's called a Parent Plus loan. So Parent Plus loans, it's still under the federal loan program, but in this case, the student or the parent is applying to take out a loan on behalf of the student. There is a credit check as part of this process, and there is a separate Parent Plus loan application that the parent would have to do online to apply for the Parent Plus loan. It can be very beneficial because there's often much more wiggle room about how much you can borrow under that Parent Plus loan. So if the students need help covering the remainder of their balance at the school or need additional funds to help with living expenses, often that Parent Plus loan can be used to kind of help fill that funding gap or assist with those outside expenses. And another benefit kind of along with the Parent Plus loan is even if the parent is denied the Parent Plus loan based on their credit, the student is then allowed to borrow an additional $2,000 in unsubsidized loan that semester, or really each semester that school year, which gives them a little extra loan eligibility. So essentially, even though they're a dependent student, essentially they can borrow the equivalent as an independent student. So it gives a little more assistance even if the parent were to be denied. Now, another form of assistance are private student loans or alternate student loans, you might hear them called as well. Essentially, these are loans offered through the different private banks and credit unions. They do require a credit check. More often than not, students, when they're applying, will not qualify on their own. They usually need a cosigner. And the reason behind that is, unlike our regular loans, we all get like car loans or mortgages. Obviously, the bank has the car or the house as collateral, where if we don't pay off the loan, they essentially get to take your car or house. Obviously, with federal student or private student loans, they can't take your education as collateral, so there's nothing backing that loan. So as a result, they require a cosigner who would then become responsible for the loan if the student failed to pay it back. Each bank has different rules as far as cosigner and repayment and things like that. So we always just recommend before you sign for a private student loan with the bank, just make sure you understand all their rules and requirements as part of that process. People often kind of debate whether, especially parents, looking at Parent Plus loans or private student loans, which route they want to go if they're looking for those additional funds. There are pros and cons to both. With the Parent Plus loans, there is a loan fee, which all federal student loans or all federal loans have a loan fee that go with them. But often those plus loan interest rates might be a little bit lower than a private loan interest rate. But many parents will not want to do the Parent Plus loan because that Parent Plus loan is always under the parent's name. It cannot be transferred to the student. Where the private loan, the student is initially in the student's name, and even if the parent co-signs, the student's still the primary borrower, and often after a couple years repayment, the co-signer can be dropped from that loan once the bank's confident the student's able to make regular payments on that loan. So it's all this kind of a personal discretion, what works best for you as the parent or whoever's helping the student on the best avenue to take for that. Now, for scholarship and grants, on our website, we do have our institutional scholarships. The nice thing about our scholarship application is it does open up twice a year. So it'll open up in the fall semester each year to apply for the following spring term, and then during the spring it'll open up again to apply for the following fall term. In our scholarship application, tries to simplify things as much as possible. It's one scholarship application to apply for all of our scholarships. So a student wouldn't have to go through and necessarily pick and choose the individual scholarships they think they qualify for and apply for those directly. The one application will be used to apply for all of those scholarships. So it does kind of help streamline that process a little bit. Now we do also have on our website a list of private scholarships from outside sources. Those usually have a little more strict timeline as far as when you can apply. Most private scholarships usually open up early in the new year, so January, February area, and then most of them have their scholarship applications closed by April, early May, but somewhere as early as March. So it is a little bit of a time crunch each new year to make sure if you are wanting to apply for those private scholarships to do that as soon as you can in the new year when those open up, because most of those, like I said, by May their applications are closed for the year and they do not reopen later in the year for more students. So just keep that in mind as you're progressing through school. There's some of those items are a little more time crunched and year specific on when you can apply. So for the cost of the programs, different programs have different tuition fees just based off of requirements for that program, things like that. We will have cost sheets available if you haven't gotten one already with the new student orientation information. That gives you an idea of what tuition fees is per credit hour to help students kind of project and know what their costs might be for any given semester. Something to keep in mind, we emphasize this pretty heavily in the student presentation as well, that a student must be at least in 6 credit hours to receive federal student loans, but once they're in 6 hours, they're essentially offered their maximum loan eligibility for the semester. So whether they're in 6 hours or 12 hours, they qualify for the same amount of federal student loans. This is important because if a student's consistently taking 6 or 7 hours every semester and taking out that full loan, long term that could result in them running out of loan eligibility, essentially hitting their lifetime limit before they actually graduate. So if your student does plan on attending part-time on a regular basis, we just emphasize for them to reach out to us so we can help them do some planning and we can help them do some projecting so we know if they will run out, what semester they'll run out so they can plan for that, or help them kind of spread out their loan eligibility and maybe not use the full amount each term to make sure they have some available all through graduation. Now students can receive financial aid even if they're less than full-time. So if the student's receiving grants, they don't necessarily have to be a full-time student to receive those grants. It's just adjusted based on how many credit hours are actually in. But the student session has a little more details on how that adjusts down for that. Now, something to remember, many students, even if they accept all their federal funding that's offered to them, be it their grants and their federal student loans, often it's still not enough to cover the full tuition fees if they're full-time each semester. This is something to bear in mind as far as needing to pursue payment plans, private student loans. That's why we always recommend applying for scholarships whenever possible, just to try and help fill any funding gap that could occur as they're progressing through their program. But something to keep in mind is you don't necessarily have to decide today how you're going to be covering that remaining balance once they register. There's still time to kind of work through that process and speak with us if there is still remaining balance before the term begins. So with contacting us with questions, just bear in mind, you as the parent or the spouse or a friend, if you're wanting to talk to us or the student wants you to talk to us with questions, we would need a FERPA release form on file for us to be able to talk to you about anything detailed really about the student's account. We can always talk to you about generalities about financial aid, things like that, but even if the student's dependent and you as the parent was required to put your information on the FAFSA, we're still restricted by FERPA law where we can't talk to you about detailed items without that release form on file from the student. Now the best way at this time to reach out to us is through our financial aid email account. The reason for that is just all of us in the office have access to that, whether we're on campus or we were to be working off campus. So it's just the quickest way for us to get a response back to you is through that email account. Of course, we understand some situations might be too complicated to necessarily handle through email, so you're always welcome to give us a phone call. Even if we were to be working remotely, we do have some access to our voicemail off campus, so we could still get those voicemails, but it might just take a little bit longer for us to respond back to you. So just bear that in mind. If for some reason we were to go all remote again, I know the spring semester obviously will be starting with all students working online, but as right now, us as staff will still be on campus, so we'll still be available as needed. But on the off chance if we did move completely remote for everyone again, then the email account is probably the best way to reach us, but we'll still be able to respond to phone calls, just maybe on a slower process. As always, we're here to help through this process, so if you or the student have any questions, please do not hesitate to reach out to us. That is why we are here. Financial aid, federal processes are not always clear. They can get very muddied, so if you have questions, just let us know. Thank you for going over this presentation with me, and have a good day.